AMD stock has been one of the biggest names in the AI boom. But after the massive run-up, is there still upside left in the stock? In this video, I'm breaking down Advanced Micro Devices' most recent quarter, take a look at the charts, discuss the three biggest risks to the business, and I'll give a one-year price target for the stock. Let's generate alpha. Here are the headline numbers, and they were very strong. For the first quarter of 2026, AMD reported revenue of approximately $10.3 billion, which was up around 38% year over year and ahead of Wall Street expectations. Earnings per share came in at $1.37, also beating analyst estimates. Margins improved, with gross margin rising to around 55%, showing the company is benefiting from a more profitable mix of AI and data center products. But the real story once again was the data center business, which has now become the biggest growth driver for the company. Data center revenue surged 57% year over year to roughly $5.8 billion, driven by massive demand for AMD's server processors and AI accelerators. This is important because it shows AMD is continuing to gain traction in the AI infrastructure market, an area currently dominated by NVIDIA. The client and gaming segment also performed well, generating around $3.6 billion in revenue, up approximately 23% year over year, thanks to strong processor demand and growth in GPU sales. CEO Lisa Su specifically mentioned that AI demand continues to accelerate, especially around inferencing and agentic AI workloads, which is creating stronger demand for high-performance CPUs and accelerators. Now, one thing I found interesting was the company's forward guidance. AMD guided for approximately $11.2 billion in revenue next quarter, which was well ahead of Wall Street expectations and suggests management remains very confident about ongoing AI and server demand. Overall, I'd say this quarter was very impressive and confirms one major thing. AMD is no longer just a PC chip company. It's rapidly becoming one of the key players in the global AI infrastructure race. Let's take a look at the charts, starting with the moving averages. Right now, AMD is trading well above its 50-day moving average, which is generally considered a bullish short-term signal. That tells us momentum has improved recently, and buyers are still supporting the stock on pullbacks. But the really important level investors are watching is the 200-day moving average. The 200-day moving average is often viewed as the line separating long-term bullish and bearish trends. And right now, AMD is trading far above that 200-day level, meaning the stock is in a clear long-term uptrend. This stock has been on absolute fire over the past month. Looking at the relative strength index, it is flashing overbought. So while momentum is clearly bullish, investors should be careful chasing the stock after such a strong move. In the short term, the stock could pull back a bit. Over the long term, the chart looks like it's in a massive uptrend. Now, despite AMD delivering very strong growth recently, there are still some major risks facing the company going forward. Here are the three biggest risks AMD shareholders need to watch closely. The first is competition, especially from NVIDIA. Right now, NVIDIA still dominates the AI accelerator market by a huge margin. Their software ecosystem, AI networking business, and GPUs have created an incredibly strong competitive advantage. So even though AMD is growing rapidly in AI, the big question is whether the company can actually gain enough market share long term. The second major risk is valuation and expectations. AMD stock has already had a massive run over the last few years because investors are pricing in huge AI growth potential. The problem with that is expectations become very difficult to meet. If AMD reports even one weaker quarter, lower guidance, delays in new products, or margin pressure, the stock could sell off very aggressively. We've already seen how volatile AI stocks can be whenever sentiment changes. The third major risk is cyclical demand and macroeconomic weakness. Even though AI is booming right now, parts of AMD's business are still tied to gaming demand, PC demand, capex spending, and data center budgets. If the economy slows down, businesses cut spending, or consumer demand weakens, AMD could absolutely feel the impact. Semiconductors are a cyclical industry, and earnings can sometimes swing much more dramatically than investors expect. Now, the big question: where could the stock go from here? Most analysts maintain a buy rating with an average price target of about $389. The stock has already flown past that. Looking at the discounted cash flow model, the base case estimated value for the stock is about $210, and the best case is $731. Please keep in mind that DCF is highly sensitive to assumptions. Even small changes to growth or discount rates can swing the fair value dramatically. As for my opinion, on February 26th, I did a video on AMD after their fourth quarter results, and I gave a price target of $350. AMD is now well above that. Taking into account new information, today I am also giving AMD a buy rating with a one-year price target of $500. Here are 3 reasons why I believe it's a buy. The first reason is AI growth. Artificial intelligence is rapidly becoming one of the biggest technology shifts we've seen in decades, and AMD is positioning itself right in the middle of it. The company's Instinct AI accelerators and server chips are seeing enormous demand from hyperscalers, cloud providers, and enterprise customers building AI infrastructure. If AMD continues taking even small amounts of market share in AI accelerators and data centers, the revenue opportunity could be massive over the next 5 to 10 years. The second reason is CEO Lisa Su and management execution. Lisa Su has done one of the greatest turnarounds in tech history. A decade ago, AMD was struggling badly. Now the company has become a global semiconductor leader, competing directly against Intel and NVIDIA. Management has consistently launched competitive products, improved margins, gained market share, and expanded into higher growth markets. Investors have gained a lot of confidence in AMD's ability to execute long-term. The third reason is diversification across multiple growth markets. AMD is no longer just a PC chip company. Today, the business has exposure to AI accelerators, cloud computing, data centers, gaming, enterprise infrastructure, and high-performance computing. That diversification gives the company multiple ways to grow revenue over time. If AI demand remains strong globally, AMD could continue benefiting from one of the biggest technology spending cycles we've ever seen. Here's a bonus reason why AMD is a buy. Lisa Su mentioned earnings per share could hit $20 over the next 3 to 5 years. The typical forward PE for a semiconductor is about 30. 30 times 20 gives AMD a stock price of $600 over the long term. Lisa Su also tends to be very conservative with her estimates. Earnings could end up being much higher. Overall, I still believe AMD remains one of the highest quality growth companies in the semiconductor industry. Yes, the stock will likely remain volatile, but if management continues executing and AI demand keeps accelerating, AMD could still have significant upside potential from here. Thanks for watching. If you enjoyed this video and want more earnings recaps with one-year price targets, please like and subscribe. Until next time, keep earning, keep saving, and keep investing. I personally own AMD shares. This is not financial advice, just my personal opinions. Make sure you consider your own risk tolerance, time horizon, and financial situation before making any investment decisions.